管。
Good Fed Day, Warriors. Dale at TradeGATEHub, sponsored by TradeView. So it's a big day. I did a few scalps that were posted in the room. First one I did was because I saw a little 3-drive here in cable. Got long at 28.14. I'm out. If you remember Monday, I said I want to sell a rally back around 130. After the Fed or ECB, if we get a bout of dollar weakness. But that has shifted. WD Gann said, if you don't learn how to change your mind, you won't have any change left. And that's mainly because of the action here in EG. It's about 78.6 back, but I think you could probably short either of them on a rally. And the euro, I'd be interested in getting short between 1150 and 112 on any bout of dollar weakness. Aussie still is the weak sister. The commodity currency is barely hanging on. I think you could sell that. I've been talking, you could sell the commodity currencies. It's the second lower high. So any rally you get in Aussie, you could probably risk 68, 50 at the most. So I think that's, we're headed towards 62.5 longer term. So I'm pretty negative Aussie and the commodity currencies. What I did in the end was there was a, off the 30-minute chart, which is what you do during weeks where there are landmines everywhere you go, is I just sold turnaround Tuesday trade up here, the yen, and covered here. So I may look to reshort the yen into the BOJ or after the BOJ, depending on what kind of rally we get. Maybe we could even get one more run up towards this 142 level that we closed at last week. So yen back at support. We'll see if hawkish Fed could drive it up for a selling opportunity. The dollar index, my levels would be about par to look to be a buyer in the Dixie. Gold is acting better than silver, but still, maybe this is a right shoulder of a head and shoulders formation that would take you down to 1910, left shoulder, head, developing a right shoulder called the neckline 1950. So that would take it down to 1920. I'm looking for much lower levels. And the silver, this recovery doesn't look so great to me. It'd have to get back over 25 to do anything right, probably headed back down towards this 2360, 23.5 level. But eventually I think that you'll have a chance to buy this market with a 20 handle. Looking at that, what's really interesting is what happened in stock indexes. I think you almost have to be a market historian to recall the last time the S&Ps made a new recovery high, and this time it was on a non-confirmation. See, the last 4-hour high was confirmed. This it wasn't. But the bigger point is S&P's made a new recovery high, and the Qs, or NASDAQ 100, were a mile away. So this is what led it on the way up. It's my view it's going to lead it on the way down. Microsoft beat on earnings, but it's actually coming in, 341, about 9 lower. So we'll see. And this is in front of the Fed. So you already have weakness in front of the Fed. Amazon still looks weak to me. NVIDIA, people probably looking for a new high. Maybe we get a new high, but it could also be a failing rally. 464 would be about 61.8 back. Apple grinding it. Should we take out this trend line and moving average, call it 190? That would be a breakdown of a wedge that you could retrace all the way back to where I have it anchored, is back here at the low at the beginning of the year, and that was 125. Okay, so if you believe in wedges, wedges can retrace 50%, but there are plenty of stops Apple could make, the 190. This is going to be a big area. This was a big channel that broke out of. 156 will be huge because that was the breakout in Apple. So that's a look. VIX is trying to round out a bottom here. Although the S&Ps have made new highs, the low in VIX from the solstice is still intact, and there's an expression that it's pretty quiet and boring, that markets top with violence and bottom in silence. I told everyone not to get too bulled up about energy. You know, we got to this $80 level. It's not doing much. And one other currency that I've been bullish on that's also making progress, and you've had several opportunities to buy at the 31.5 level. Okay, so we're on the verge of coming out of here in Canada. I like Canada still. I think you could buy it anywhere, and you're wrong under, 31.50. Because if we start cracking this, I see 33, and then I see 36, and then I see it over 38. So Canada, the inverse of Aussie, looking pretty good. So good luck, everyone. I just want to remind you, you don't have to trade. All right, just remember that's an option. You wait for the dust to settle, or you let the market come to you after the number. And if you can enter with a reasonable stop, reduce leverage on your first entry, but you don't have to trade. You could go all week without trading with all these landmines. We have more earnings coming up. I'm sure there's a lot of people bought Microsoft looking for good earnings. They got good earnings, and yet, it's down 8%. So be careful out there. There is something, you can't guarantee much in trading, but I can guarantee this, that the markets will be here next week after all of these news events are out of the way. So make sure your equity is